What's going on, guys? We are doing the mailbag early this week because we have something special for you planned on Thursday. Yeah, boy. I'll make sure this setup all works here for you here.
We have to, we don't really trust Google these days, everybody.
All right, so if you have any questions that you want to shout out here on the mailbag, just hit us up right on Twitter. So at Sang Lucci, you can ask any question that you want to. We're getting some joke questions now.
It's about time.
It's about time.
You guys have been taking us way too seriously.
We might as well have some fun with this. And actually, there's a comment that I made on Twitter today, which a couple of people want to reflect on.
What is that?
Which I'll do that at some point here. It looks like, what did I say? I said something about social networks.
Yeah, you are quite opinionated about social networks.
Yeah, I'll find it. I'll find it in a second. All right. Anyways, market continues to chop around. I honestly can't believe we're back up here to SPY 188. It's unbelievable. It's unreal. But in reality, we've done this many times before, right? How many times have you seen a significant drop on some news or some panic? In this case, it's Ukraine and Crimea, which apparently nobody really cares about. And we're all the way back up to 188 on the SPY. A lot of names have retraced considerably. If you take a look at Visa, MasterCard, they look like nothing ever happened. Wells Fargo, Bank of America. Interesting things are happening in gold. And then obviously the high flyer names, which everybody is paying attention to quite a lot. We have a circus in here.
Pete's negotiating a deal.
Whatever. It's not even worth it. All right, guys. So we have a question here from last week that we're going to go ahead and take. If you have a massive position, over 500 plus contracts, how do you exit the position? And ideally, guys, what you want to do is you want to sell into strength, right? And that's ideally what you want to do. So it's tough to do it because you have such a big position, and you know you're going to sway an option left and right. If you trade it aggressively. So, for example, if you take an illiquid option, let's take anything that we traded today. Let's take a look at this 417 put, this weekly put. Let's say you have 500 contracts in this thing. You see your spread is about 20, 25 cents. If you're selling on the bid and you want to get a fill of 370, and there's only 10 contracts there, I mean, what's going to happen here? Number one, you're not going to be able to get that size unless she's still, for example, this is a put, and unless she's still really weak, right? She's still really weak, and there's still aggressive demand for this option. In which case, most people are hitting the offer in order to get in this, and you're just trying to take a bid to get the hell out. So that means, a market maker will provide that liquidity for you. If they see the lean is more towards the offer. When we talk about lean, it's like the sentiment in the option, and this is something that we teach in our options course. But let's say a stock has sort of topped out or even bottomed out, and this Netflix, for example, today bottomed out at around 417, 416. And let's say this is the top of the market, right? And you're trying to get out, and all of a sudden there's a big squeeze in the stock. You're not going to get 370 for 100 contracts, and if you have 500, you're not going to get all that off. So what's going to happen? You're going to send this in the market, let's say, and let's say you limit below. Let's say you limit below 10 cents below, and you'll get 370, you'll get 365, and you get 360. But if it's right at the turning point, you might not even get that fill. You might not even get that fill, and you got to go market, and you're going to end up beating it down, and that's also going to force the squeeze in the actual equity to continue. So you have to be deceptive. You have to sell into the strength. So before she even gets up here, you want to be out of a considerable amount of your position. That's the only way to do it, to do it the best way. Obviously, you're going to be leaving some profits on the table. That's kind of an issue for a lot of people. I don't even think I shared this thing, so that was probably not helpful for a lot of people. So again, we're going back to this particular option here. If you're trying to sell all of this on a bid that you're losing that bid, you're going to end up pushing the value of this option down, and you're also going to provide a squeeze in that particular stock. And it gets pretty nasty, especially if you have a lot of contracts. This is my world here. So oftentimes, I'll find myself in this situation where I have 500 contracts to sell, and I don't know what to do. I don't know what to do. And the only solution that you have is really making sure you get a bid or you sell out into strength. So instead, as this thing goes up towards 370, I'll sell 25 at 3. I'll sell 50 at 320. I'll sell another 50 at 330, and I'll keep selling as I get higher. So all I have up here at the top of the market is maybe 100 contracts, which I can just take and launch in the market, sell it, and get the hell out before this thing reverses on me. And again, like there's a fine line here, because again, you have 500 contracts, you have so much size, in reality you never want to sell this thing. You think it's going to go to the moon, but these things always pull back. That's the nature of these things. So it gets pretty ugly.
You want to talk a little bit about, I don't know how much this relates to it, but you and
Sure.
Peter talked about how you guys can actually move the stock, with the option. I mean, if you have a big enough position in the option, you can do the reverse of what theory would tell you is possible.
Yeah, Peter has some intricate, and Brian also has some intricate ways to explain this. But
Right.
what Charlie is saying is that, if you sit on the bid, for example, like if I have 500 contracts, and again, I flash my size, let's say. Let's say I wanted to go ahead and sell this thing, and I flash my size at $4, let's say. I can also influence stock price. I can influence stock price. All of a sudden, everybody playing the equity is going to see this huge seller in the option, and they're going to pause. They're going to pause. They're going to say, all right, what's going on here? And it's cause for, okay, let's reassess. And essentially, we can influence stock price just by throwing out size on the bid or on the offer. We can do that quite often. You don't want to get too crazy with it, because if you end up in a battle with a big market maker, they'll take you to town.
Yeah.
They will take you
But
to town.
it's something that happens, guys, and it's the kind of thing that's like, you're not going to learn that in a classroom, in your Black Scholes college classroom.
Right.
It's the kind of thing you have to see from experience to learn.
Definitely. We do show examples of this, by the way, in the course.
Yeah.
So let's take a couple gag questions here. There was one. Where's this comment that I made? All right. So I made a comment on Twitter that said the world has yet to experience the fallout from this push towards social networks and big data. I meant to say big data. Okay, I meant to say big data, and that fallout will come soon. And what I mean to say with big data is that your whole presence online, every click, every video you click on, every advertisement you click on, even the moves of your mouse, okay, every keystroke on your keyboard, everything is being recorded. Now Facebook is even talking about having that facial recognition software.
Minority Report.
Right? And all of that shit is being recorded, right? And they were talking about, it was sort of a theory on what they would use it for. And imagine if they can take a look at your face when you take a look at an advertisement, or you take a look at a page, or you take a look at a post, right? How much, and you now quantify that, and that becomes a data set. That becomes a data set for big data to store and to sell to X, Y, and Z advertiser, right? So
they can tell the amount of stimulus you're experiencing by the dilation of your pupils,
right.
Just random stuff that
right.
It's completely outside of our control.
Right. So my whole theory here, okay, is that since we all make these pushes towards something, right, and trends become used on a daily basis by millions of people before that trend gets blown up, okay? And you want to talk clothing, you want to talk the way people advertise. Remember, before it was all print advertising, and now all of a sudden advertising is all about clicks. It's all about, what are those, impressions? What are those statistics?
Yeah, impressions.
Pay-per-clicks and all that kind of stuff. So, right, and things just change slowly and slowly and slowly. But something has to happen. Something always happens to one trend, and it blows up. It completely blows up. Some things happen for the worse. Some things just transition into something else. This, social networks, sharing, and then creation of data, that big data, on everything that you do, just for the practices of selling that data to somebody who might find it useful, to sell you a product in the future or whatever. I am saying that something absolutely horrendous is going to happen. I am saying that one day you're going to wake up and there's $0 in your bank account. and you are not the person that you are, right? You're not even a person anymore, right? You are essentially just a watch that has what is it, the scan thing on it? What
Like a
is
heart
the
rate monitor.
no. You know how they you have on your app, you have a little barcode.
Yeah.
You have a little barcode.
Right.
That's all it is. It's just scans of barcodes, and you're just numbers now. You're reduced to now zeros and you're just a number, and you're no longer human. And people won't even appreciate the human aspect of things. And that's where I'm saying it's going. That's where I'm saying it's going. That's where it all has to go. Now it sounds crazy, and obviously I'm entitled to my own opinion.
I got a question for you.
All right.
To what extent do you think that this perspective is influenced by living in New York City? Because I was walking around yesterday in New York, and I found myself like swim moving through like crowds.
Yeah.
Right? Like it was like I was, trying to get to the quarterback, and I was, and I was just going over to a friend's place, and I'm like, what is my deal? Why am I like punching people right out of the way to get to where I'm trying to go? And I'm
Right.
not late.
Right.
I'm not in any rush. Like,
Right.
why is this ingrained in me? And I realized that my perception of the world and it's just natural. It gets impacted by the environment you're surrounded by. And New York is a place that, Times Square is a perfect example. Advertising, you just get hit in the face by advertising everywhere you go. This place,
Exactly.
you're getting everyone here is looking at a way to make a buck from you. At least here they're transparent about it. In LA,
Yeah.
they're not.
I would agree with that. I think I think location has a lot to do with it. I think location also has a lot to do with the influence or bad influence of some of these things. All right, and you talk to a lot of young folks, young professionals out here in New York. A lot of them will say the same thing. Like, it's all hustle and bustle here, all day long. Everybody is so fucking tired, and most New Yorkers, they want to get the fuck out of New York during the weekend.
Oh,
they're like, oh my God, I'm so happy to get to New York. But then the need for it, because it's ingrained in your bodily processes.
Right.
You fucking come back.
Yeah.
You come back. You come back for your fix.
Like a drug.
You come back for your fix all the time.
And no one goes out on weekends. People sleep. Because the week they're going out, they're working and stuff like that. Yeah, everyone just sleeps. Anyways, we're getting distracted. We got a couple more questions.
Yeah, a couple more questions here. We got weeklies hard to swing trade. Theta killer, day trade is easy. Absolutely. If you're trading weeklies, for example, something like this Netflix option that we just shared with you guys. If you're trading a Netflix, or if you're trading any of these particular stocks and you're trading them, you're trading weeklies, you're looking for a move that happens that particular day. If you are going for an overnight on a weekly, that means that you have a good idea of what the sentiment tomorrow is going to be like, okay? And you're in a trending environment, and you are going with the trend. If you're in a chop environment, one that we are right now, chances are any option that you hold for a directional position overnight, whether it's short or long, you are going to get smoked the next day. Case in point, a couple of days ago, everybody was short. Now all of a sudden, everybody is fucking long. Okay, so you have to really understand your environment before you go ahead and take any weeklies overnight. Okay, weeklies overnight, you have to be crazy good at timing. Okay, and reading tape and understanding how everything is going to come together for a big 2-3 day move, and you are at the cusp of it. By the way, this only happens 1 out of maybe 10 times.
Right.
So are you that good? Ask yourself. Chances are you ain't. So don't fucking do it.
Yeah, correct me if I'm wrong, but if you're building into a weekly position, a weekly swing position in the weeklies, you're looking for the big macro move.
Exactly.
You're obviously reading tape, but you're also looking sentiment across the board.
Absolutely.
And you're positioning yourself for like it happens 6-7 times a year kind of move.
Right, that big move that happens in like
Right.
1 or 2 days where everybody gets the most premium gain and everything does the same thing. So all of a sudden the market breaks out in a huge trend,
Right.
and you can just throw a fucking dart, pick an option, pick a basket of options, and you're going to make money.
Right.
But finding those times is extremely difficult.
Right.
All right, so we have another question from MJR222. Do you ever use stops when in a position? Me personally, I don't. Because I read tape. So if I'm sitting here, let's say I'm in this, I'll share the screen on this Google. Let's see, what do we got? Oh, this is Priceline, actually. Okay, so if I'm sitting here in this thing, and let's say I don't know, let's say I'm long this thing with an option, right? Let's say I'm long with a price line, I don't know, 1320 call, and I'll pop this up too so you guys can see this.
The stock traders.
Here we go. All right, so let's say I'm long this particular call, and also I'm looking at my level 2 at the same time. I mean, as long as my level 2 or time of sales tells me like, okay, I still have a buyer here, and the market is still strong, and let's say the other techs that I'm watching are still strong, the Google's still strong, and Apple, I'm still going to hold this. The moment at which I see something on my tape that is like, whoa, maybe this trend has slowed down here, that's immediately when I start going to take profits. I mean, that's at least when I'm trading at my best. You know, as soon as the tape signals you or tells you like, okay, something just got weird here, or the market, let's say, reversed, or, you know, the bullish sentiment is no longer in a lot of the internet names, then that's when you want to take your profits. So that's what a tape reader can do to adapt to every single second that the market throws, you know, different things in his face. You know, and as long as you stick with what you read on the tape, you're not being stubborn, you're good at managing your emotions and things like that, you're okay. For people to use stops, you know, you want to use them if you're not if you're not emotionally stable. Let's say you usually make mistakes on the emotional side. You want to make sure you use stops. That way you can stop yourself. You know, you can stop yourself from making a stupid trade, which I should probably do on numerous occasions. You know, or you know, if you're not a tape reader and you're a technical guy and you're looking at certain levels, you know, yeah, absolutely, you should use a stop as well. Me personally, I don't, and I have other reasons why I don't, because again, like when I throw out stops, remember, like everybody who buys a particular option or is going for a particular move, let's say, I don't know, Apple long or whatever the case is, most other people are in that trade too. Like whenever you think there's going to be a breakout in a stock, everybody else thinks there's going to be a big breakout too. Market makers see all that demand for the stock. They see all your stop losses come in as well. They know exactly where to burn you before they let that move go. So, you know, you guys can sit here on Twitter and comment as well. How many of you guys have been in a position that looks so great, you got in, you got stopped out, and then the move happened, and you weren't in it? Okay, there's a reason why that happened. There is a reason why that happened. So that's, you know, those are some of the reasons why I personally don't use stops and things like that. All right, we have another question here about the U.S. dollar, which I'm not going to answer because I'm not schooled too much in terms of Forex. How should a risk-averse scalper type be watching and interpreting the value of the USD before, during, and after hours? Me personally, I don't use the U.S. dollar as a metric to make any trades. Brian, you want to comment on this? I don't know if you have anything to say about it. You don't have to say shit.
Well, when the dollar appreciates, I believe the market appreciates as well.
I thought it was the other way around.
Yeah.
See, the correlation changes, though, too, guys.
It does.
There's correlations that used to work. So, for example, when gold and the treasuries would go higher, the market would go down. Like, that was a big correlation that always happened, because gold was the safe haven. It was the safe haven. Then it no longer was, and then all of a sudden, you know, gold and treasuries would move with the market. So we would get a rally, and you'd also see people picking up gold, too. There was a point at which the U.S. dollar weakness meant higher stock prices. You know, and sometimes that correlation works, and sometimes it doesn't.
If the dollar goes up, rates go down, stock goes up.
Exactly. I mean, that's what it should be.
That's what it should be.
That's what it should be.
Right.
You know, and oftentimes
it might be the dollar might go up because another currency, big currency, is trading and it's going down.
Right.
So that's what everything's neutral. Dollar goes up, stock goes up.
So, you know, again, right now what's in play is the yen. So you know, for just be what is this guy's name? Mufi Galaxy. At Movie Galaxy on Twitter, watch the USD yen. That's one that I know is definitely in play.
Just be you.
And then last question here. This is my boy out in Boston. He's just a ridiculous person.
Sure.
Would you rather fight 100 duck-sized horses,
Yes,
or one horse-sized duck?
One horse-sized duck.
Why?
Yes.
Absolutely.
Yes.
Dude, one horse-sized duck is a single. I know one point of attack.
Yeah.
Dude, 100.
If you go
duck-sized
down with
horses,
100, they just stomp on your face.
100. Yeah, they're coming from all directions.
It's like an army of ants. Is what
Yeah, exactly. I'd rather take on one giant crow than 100.
Like 108-year-olds could beat you up, probably.
All right. Well, how would you take down this said one horse-sized duck? I mean, what would you do? I would just choke his
Sweep
neck.
the leg.
I would break his neck. No,
That's
I'd
a
break
big
his
one.
neck.
I don't know if you could break
Ducks
his
are
neck.
known to have skinny legs.
It's a duck. It's got a fragile neck.
Brian suggests.
Sweep the leg.
Sweep the leg. Sweep the leg, guys. You heard it at Sang Lucci.
Then
Sweep
you do
that,
a crane.
Sweep that leg.
Sweep the leg and then.
Yeah.
You
Okay.
went to
And then stomp them out.
All right.
Continue.
Very simple.
All right, guys.
All right, everybody.
In all seriousness, join us. I don't know, if you guys didn't see Chaim Bodek on Bloomberg TV this morning, go to Bloomberg. You will see his interview on there. We are having him Thursday afternoon. We got a very intelligent trader, one of our boys out of Chicago, who is joining us for an interview. You guys are going to learn some very cool stuff from that conversation between those two guys. 4:30, Sang Lucci TV. Be there.
All right. See you guys on Thursday.
Peace.